Hello, traders. This is Chris from AAAFx taking a look at the crude oil markets. U.S. oil initially rallied a bit during the trading session here on Friday, but then gave back gains. We're still essentially in the same type of market we've been in for a while, where we're just kind of banging around between 79 and 72.5. We're trying to sort out whether or not there's going to be demand. Quite frankly, it was a bit shocking how little OPEC got its members to cut. So at this point, you have to ask what's going to turn this market around. It'll be interesting to see what does. But there's a lot of noise in financial markets right now. We have stocks taking off to the upside because the Fed's going to probably lower rates. At least that's what they believe. But what they're not asking is why they are lowering rates. Lowering rates after an inflationary cycle is typically a situation where you are going to run into recession. So what happens in a recession? There's a lot less demand for oil. So that's part of what we're seeing. Nonetheless, we're still in this range. Same thing over here in Brent. 84 is your top. 77 is your bottom. We're getting closer to the bottom, so we'll see if we get a bounce on either one of these charts. Short-term bounce could offer a short-term buying opportunity. If we break down below that, then both of these grades could drop down about another $4 or $5. Oil does like to find roughly $10-ish ranges to trade in. I think we're still looking at that. Plus, you also have to keep in mind that as we go into December, less volume will be the norm, meaning we may not see a lot of action here in a couple of weeks. So definitely something to keep in the back of your mind as we just chop around back and forth.